ठीक है, करो स्टार्ट। Hello, good morning friends. Welcome back to in Accounting Standard 28. We have covered question number 21. Question number 21 deals with goodwill impairment. So we have discussed if goodwill can be allocated on a reasonable and consistent basis, then we will allocate the goodwill first, take the total CGU value we will take, add goodwill if goodwill can be allocated, take total. This total will be compared with recoverable amount which was 600, and if recoverable amount is lower than total, then there is impairment loss 500. Allocation of impairment loss: first goodwill which is 200 and balance towards CGU that is 300. After providing impairment loss, goodwill will become 0 and the assets carrying amount will be 600. 900 minus 300, so assets will become 600, goodwill will become 0. This is how impairment loss will be provided. This is how the impairment loss will be provided in case goodwill can be allocated on a reasonable and consistent basis. Let us practice one more question number 22. Keep the calculator ready and you will be able to enjoy the question number 22. On 1/1/2003, A Limited acquired net asset of B Limited for 66,25,000. The fair value of the net asset was estimated at rupees 60 lakh. So the total consideration paid is 66,25,000. Out of that, net asset is 60 lakh. Therefore, goodwill arising on acquisition would be 6,25,000. 66,25,000 minus 60 lakh will be the goodwill. Now they are saying net asset were to be depreciated over 10 years. This 60 lakh rupees will be depreciated over 10 years with no salvage value. So depreciation per annum would be 60 lakh divided by 10 years. So they are providing depreciation at the rate 6 lakh rupees per annum. During the year 2006, there was an indication of impairment loss in respect of this asset. This asset was purchased on 1/1/2003. Now it is 2006. So the cash flow for the remaining life of the asset was estimated to be 12 lakh, 950, 8 lakh, 830, 8 lakh, 850 and 6 lakh. So 7 years future cash flows they have estimated, which means 3 years are over. Out of 10, 3 years are over. Total depreciation provided is 18 lakhs and the carrying amount of the asset would be 60 lakh minus 18 lakh is 42 lakh. Is it right now? Let us compute the value in use. This data is given to compute value in use and the discount rate given is 12%. Find out the impairment loss to be recognized by the company and how it will be treated. Okay, so what I need to do, first I need to always compute two things, carrying amount and recoverable amount. Carrying amount will be after providing amortization and depreciation till the date of impairment. Now in this question they have not mentioned about goodwill. They have not mentioned about goodwill, whether goodwill was amortized or not. So what we will do, we will assume, goodwill is not amortized. We will assume goodwill is not amortized. So goodwill will remain the same, but the asset will be depreciated and the carrying amount of the asset will be reduced. So let us first compute value in use, then we'll compute the carrying amount also. Carrying amount I can explain easily. Carrying amount I'll explain: asset, goodwill, total. Cost of the asset was 60 lakh. Tick mark. Those who have the book can just tick mark in your book. Goodwill was 6,25,000. Total 66,25,000. I have given the answer in the book. So please tick mark. As a homework, write in the notebook. Less depreciation on this asset will provide depreciation 6 lakhs into 3 years. That is 18 lakh. Goodwill they have not mentioned anything. If goodwill is not mentioned anything, you ignore depreciation or amortization on goodwill. Therefore carrying amount today after 3 years, 42 lakh, 6,25,000, and this is 48 lakh 25,000. So this is my carrying amount right now. I'll highlight it. This I will require for impairment calculation. Okay, so step number 1 is carrying amount, done. Step number 2, value in use. Step number 2 is value in use. So how do I compute value in use? There are 7 years, 1, 2, 3, 4, 5, 6, 7, and then read the 4th and the 5th line. Cash flows are given 12 lakh, 9,50,000, 8 lakh, 8,30,000, again 8 lakh, 8,50,000, and 6 lakh. First we will compute the discounting factor, present value factor at 12%. Type on your calculator 1 divide by 1.12. Press equal to, you will get 0.8929. Again press equal to 0.7972 equal to 7118 equal to 6355 equal to 5674 5066 4523. Now what you do, you will have to multiply cash flow, discounting factor and add them. To do the calculation fast, use memory plus function. 12 lakh into 0.8929 equal to memory plus, you will get 1071,480. Continue the good work. 9,50,000 into 0.7972 equal to memory plus. 8 lakh into 0.7118 equal to memory plus. This way you will continue and take the total of the last column. Take the total of the last column. Take the total of the last column. How much is the total of the last column? 4081,635. 4081,635. Do we have net selling price in this question? This question does not have net selling price. So what should we do? If net selling price is not given, then take value in use as recoverable amount. So now I will compute impairment loss. Total carrying amount is given 48,25,000. Recoverable amount is computed by us in the previous step, write in bracket working note 2, and therefore impairment loss 743,365, the difference. The next issue is how this impairment loss will be allocated. How the impairment loss will be allocated. As we have discussed, first it will be allocated towards goodwill and balance amount will be allocated towards assets of the CGU. So out of 7,43,365, first allocate towards goodwill. What was the balance in goodwill? 6,25,000. So that goodwill will become 0, and remaining impairment loss amount will be used to write off the asset. 1,18,365. After writing off 1,18,365, the carrying amount of the asset will reduce by 1,18,365, and now the carrying amount will be 4,081,635. What about the depreciation? Now this amount will be depreciated over the remaining 7 years, and goodwill balance has become 0. So let us go to next question number 23. Very important. Here we are going to solve it 2 times. One, if goodwill can be allocated on a reasonable basis, and second, if goodwill cannot be allocated on a reasonable basis. So you will be able to see both the aspects of the goodwill. First and second question on goodwill we solved. 21 and 22, goodwill was allocated and there was only one CGU. Now we will have more than one CGU, and you will have to apply the ratio for allocation. So please come to question number 23. I have told you to mark it very important. This question is not in your current study module, but it is relevant for your exam, and they are going to ask you. A Limited has 3 cash generating units with the fair value of the asset of these units in the ratio of 3:2:1. Underline. This is a hint given for allocation of goodwill. For 3 units A and B and C, B acquired all 3 CGU at a price of 2,500 lakhs and recognized a goodwill of 600 lakhs at the time of acquisition. Now what is the status? After a few years, it is found that unit A, so there is an indication that unit A might be impaired. There is an indication from the internal or external sources that unit A might be impaired because it is incurring losses, and the recoverable amount of unit A is 750 lakh. So after they got the indication that there can be impairment, they calculated the recoverable amount, which is now 750 lakh. Presently the carrying amount of these units are, right now after so many years, the carrying amount of unit A is 725 lakh, B is 500 lakh, and C is 220 lakhs. So unit 1, 2, 3, today the carrying amount is given. The goodwill today is appearing in the books at 420 lakh. They might have amortized some goodwill. 600 was at the time of acquisition, but today the carrying amount of goodwill is 420 lakh. So we are going to consider 420 lakh in the calculation. Find the impairment loss to be recognized for cash generating unit A. Find the impairment loss to be recognized for cash generating unit A if there are 2 questions. Goodwill can be allocated, underline can be allocated to the CGU on a reasonable basis. In that case, this 420 lakh we have to allocate. So what we'll do, we will allocate in the basis of fair value of this asset 3:2:1. which was there on the date of acquisition. Second question, goodwill cannot be allocated to CGU. Suppose goodwill cannot be allocated to CGU, then all the CGU together will become a larger CGU and will be tested for impairment. And the recoverable amount of the three CGUs taken together is 1700 lakhs. So that's a very, very important question. That's a very, very important question. So now we are going to solve it. Dear student, we are providing accounting standards on our YouTube channel AS Foundation, and we have uploaded all the accounting standards. Please go through the high quality accounting standard lecture which are covered in detail in our YouTube channel. Also requesting you to share these YouTube lectures with maximum number of your friends. All over the country there are large number of students who may not be aware about this lecture. So if you are watching this video lecture, immediately take a pause and share it with maximum number of your friends. Share it on Telegram or YouTube or WhatsApp or Facebook, whatever you can, but you have to spread it. First thing, like the video if you really like it, share it, become the subscriber. We are going to upload more and more lectures of intermediate on our YouTube channel AS Foundation. It will become like a one-stop solution for all your intermediate subjects. So please subscribe, like, share, and if you have any comment to offer, you can offer your comment also. If you have any query, you can call us on 9766921860 or 9422365495. So I wish you all the best for your intermediate exam, and every day please watch the video lectures on our YouTube channel AS Foundation. So let us solve this question now. First we will solve by first method, when goodwill can be reasonably allocated. Then we will perform bottom up test. Bottom up test will be performed when goodwill can be reasonably allocated. Life is easier here. So there are three columns on the right side, A, B, C, total. Take a pen or a pencil, calculator, and start solving. First point A, carrying amount of the asset. Carrying amount of the asset on the date you have got the indication of impairment. 725, 500, 220, total 1445. This is given. Then goodwill will be allocated in the ratio of their fair value on the date of acquisition. This will give you a more appropriate allocation of goodwill. It is allocated on the basis of their respective fair value. So please allocate goodwill 420 in the ratio 3:2:1. So that comes to 210, 140, 70, 420, and then total carrying amount. Take the total on your own, write below. First you will write, then I will check. Total carrying amount including goodwill is 935, 640, 290, 1865. Recoverable amount. They have given you recoverable amount only for unit A, because they think that unit A might be impaired. Other units they don't think they are impaired. So you are going to only write recoverable amount of unit A. B and C are not given. If not given, you can't do anything. Then impairment loss. Compare 935 with 750. Compare 935 with 750, 185. You are getting 185 impairment loss. So now there is a question, how this impairment loss will be allocated. First, it will be allocated towards goodwill, and if there is any balance, then it will be allocated towards the assets of the CGU. But in this question, goodwill is 210 here, impairment loss is 185. Entire impairment loss will be allocated to goodwill. Sir, why do we allocate to goodwill first? Goodwill represent the excess earning capacity. If the unit is impaired, that means the excess earning capacity has been lost. So the first casualty will be goodwill. The first item to be written off will be goodwill, and then to the other assets of the CGU. So I will allocate impairment loss to goodwill. After adjusting impairment loss towards goodwill, let us recalculate the revised carrying amount of fixed assets, 725. But did we allocate towards fixed asset? The answer is no. So this will remain 725 only. Suppose your impairment loss was more than 210, then we are going to allocate something towards the CGU also. And now the other CGUs we have not tested also. So no change in the other two CGUs. The carrying amount of fixed asset of other CGUs will remain the same. Total comes to 1445. But what about the goodwill? Will the goodwill change? It was 210. Goodwill impaired 185. So tell me, what is the revised value of goodwill? 210 minus 185. So the revised value of goodwill will be 25. The revised value of goodwill is 25. For B and C, there is no change. So I am going to take the same 140 here, and I am going to take the same 70 here. So you are going to now tell me total value of goodwill. Come on. Total value of goodwill after impairment will become 25 plus 125, 140 plus 70. Come on, student. What is the answer? What is the answer? 235. 235. So this is your answer of first part. I will just summarize. First allocate the goodwill, then compare with recoverable amount. If there is an impairment loss, first allocate to goodwill and then to the assets of the CGU. But in this question, there is no need to allocate to asset of the CGU because the goodwill itself has absorbed the entire impairment loss. Now the second question is goodwill cannot be allocated on a reasonable basis. If goodwill cannot be allocated on a reasonable basis, I will perform two tests. I will first perform bottom up test without allocating goodwill, and then I will perform top down test. Bottom up test will be performed in both the scenarios. If goodwill can be allocated, allocate goodwill and then apply impairment testing. If goodwill cannot be allocated, then also perform bottom up test, and after performing bottom up test, you will perform top down test. Is it right? So let us first perform bottom up test. Which unit is indicated to be impaired? Unit 1. So I am given data only for unit 1 only. In your exam they will give you data for suppose unit 2 also. Then you will apply the bottom up test for unit 1 as well as unit 2. But for this question only unit 1. And I can't allocate the goodwill. So I will directly compare carrying amount of unit A with recoverable amount of unit A. Carrying amount of unit A excluding goodwill given is 725 and recoverable amount of unit A given is 750. So the learned student will reply now. carrying amount is 725, recoverable amount is 750. What do you think? Is there any impairment? Is there any impairment? The answer is no. So in the bottom up test, we found that there is no impairment loss. But suppose in your exam, suppose this figure is 700, then you will have to provide 25 impairment loss. So don't try to remember the answer. Read the question carefully, compare the two. If recoverable amount is lower, then provide impairment loss. Now we'll go to top-down test. Top-down test. Next line. Top-down test will be performed after performing bottom-up test. Okay. This time, all 3 units plus goodwill will be treated as a larger CGU. Okay, so we are testing this bigger CGU which will comprise of ABC plus goodwill. And let us see what is the recoverable amount of this larger CGU. 1700 lakh. Apply test like this. First write down carrying amount as given in the problem. If you read the problem, last 5 lines, carrying amount is given 725, 500, 220, 420, 1865. Please note it down. Once you have noted down, then you go to bottom up test. Did we provide for impairment loss in bottom up test? The answer is no. There can be impairment loss in bottom up test. If there is an impairment loss in bottom up test, you are going to first deduct it here, but fortunately there was no impairment loss for unit A. For other 3 we have not tested till now. What is the revised carrying amount? Revised carrying amount will be carrying amount minus impairment loss under bottom up test. In this problem there is no impairment loss under bottom up test, but there can be impairment loss under bottom up test. So I have made the provision for that line in case if in your exam there is a loss in bottom up test, deduct it. Okay, so we'll get the same answer. Now recoverable amount, last line of the question, 1700. 1865 is the total carrying amount of this larger CGU. Recoverable amount is 1700. So there is impairment loss of 165. There is impairment loss of 165 that will be fully allocated to goodwill. That impairment loss will be fully allocated to goodwill. Okay, and therefore now the revised carrying amount will be unit A 725, B 500, C 220, but goodwill will reduce 255. Check 420 minus 165 and the total will be also now 1865 minus 165, or you can take the total of these 4 numbers, that will be equal to 1700. So this is called top down test. First apply bottom up test without allocating goodwill and then apply top down test if goodwill cannot be allocated on a reasonable and consistent basis. So these were the questions on goodwill, but the student has a query, what if the loss, impairment loss is more than 420? How do we do it? Let us take one hypothetical situation. First, there is a note in your book, impairment loss of 165 will be fully allocated to goodwill, therefore revised carrying amount of goodwill is 255 lakh. That is the same thing. Now I am going to give you one more question. On the next page you have to write one case 2. Case 2, suppose recoverable amount is 1400 lakh. Write down, suppose recoverable amount is 1400 lakh. Write down, before the table starts, write down recoverable amount is suppose 1400 lakh. Now let us see what happens. First 3 lines please copy again. I have added one question from my side, so you should thank me. You should thank me. First 3 line no change. What I did, to keep your query in mind, suppose your recoverable amount instead of 1700, you have to write in the last table given in this question. Suppose your recoverable amount is 1400. Now what will happen? You will have an impairment loss of 465. Write down, you will have an impairment loss of 465, but out of 465 we will allocate towards goodwill only 420. We will allocate towards goodwill only 420 because goodwill balance is only 420. And what about the remaining? Total is 465, allocated to goodwill is 420. What about the remaining? What about the remaining 45? What about the remaining 45? The answer is the remaining 45 will lapse because unit A has already been tested for impairment and it is found not to be impaired. Same thing for B and C, they are not impaired. So if they have been not impaired in bottom up test, there is no need to further allocate impairment loss. There is no need to further allocate the impairment loss because in bottom up test, whatever impairment loss we could have allocated, we have allocated. Whatever haircut we had to give, we have already given in the bottom up test. No hair left, so no further haircut. So once the bottom up test is already applied, those assets or those CGUs will not get further haircut, will not get further impairment loss. Is it right? So my revised answer will be 725, 500, 220, 0, 1445. Write a note here in your book. Once CGUs have been impaired under bottom up test, there is no need to allocate further impairment loss. There is no need to allocate further impairment loss. In the above example, rupees 45 lakh, but they help other cash generating unit in generation of their cash flows. On their own, they don't generate cash flow, but they generate cash flow. They help other CGUs in generation of cash flow. They are other than goodwill, because for goodwill we have a separate rule for impairment. Corporate asset are other than goodwill. Example of corporate asset: head office building, administrative building, divisional building, EDP or IT equipment, information technology department. Every company have got IT or EDP, okay, electronic data processing. Nowadays it is called IT department, where they process all your information technology related work. or you can also say research department. If you look at this example, you will understand on their own they don't generate cash flow, but they help other CGUs in generating the cash flow that contribute to the future cash flows of both the CGU under review and other cash generating units. On their own they do not generate cash flow, but they help other CGUs in generation of cash flow. That means their value in use cannot be calculated. The value in use cannot be calculated for for corporate asset. Why? Because they don't generate cash flow. If they don't generate independent cash flow, how can you compute their value in use? So how do I test them for impairment? How do I test them for impairment? By allocating it. By allocating it. So once there is an indication of impairment of corporate asset, you will have to allocate it. Again, there are two possibilities. One is corporate asset can be reasonably and consistently allocated, and second is corporate asset cannot be reasonably and consistently allocated. Therefore, I am going to first explain what you have to write. So the student will write a note in the notebook. Impairment of corporate assets. For example, head office building. Head office building. For example, head office building. So the question is, can corporate assets be, please note down, reasonably and consistently allocated to CGUs? Can corporate asset be reasonably and consistently allocated to CGUs? That is the question. Okay. The answer is yes. The answer can be no. If the answer is yes, apply bottom-up test. Apply bottom-up test. Allocate corporate asset. Allocate corporate asset carrying amount over CGUs. Okay. Take total carrying amount. Take total carrying amount including allocated corporate asset. Compare with recoverable amount. Compare with recoverable amount. Compare with recoverable amount. Allocate impairment loss over CGU and corporate assets. Okay, I'll just explain again. First, you have to check, can corporate asset be reasonably and consistently allocated to CGUs? The answer can be yes, the answer can be no. If the answer is yes, apply bottom-up test. Apply bottom-up test. How do I apply bottom-up test? Allocate corporate assets carrying amount over CGUs. Allocate corporate assets carrying amount over CGUs. For example, suppose there is a CGU whose carrying amount is 100 and allocated head office cost, let us say allocated head office cost is 50. So after you allocate, take the total carrying amount 150. Now compare it with the recoverable amount. Suppose recoverable amount is 90. Suppose recoverable amount is 90. So there is an impairment loss of 60. There is an impairment loss of 60. Up to this it is similar to goodwill, up to this, but allocation will be different. Now allocation of impairment loss, we are going to allocate it to both CGU also and HO building also. HO building is corporate asset. In what ratio? In this ratio, in the ratio of 100:50. So CGU will take a hit of 100 upon 150 into 60. So we are going to allocate to the CGU 40 and to the head office building we are going to allocate the balance. To the head office building we are going to allocate the balance, and that is 20. So this is how bottom up test is applied. This is how bottom up test under goodwill. If it was goodwill, the impairment loss out of 60, had it been goodwill, out of 60 you will first allocate to goodwill 50 and then to CGU 10. But if it is corporate asset, then you will allocate in the ratio of their carrying amount. Then you will allocate in the ratio of their carrying amount, because it is not goodwill. It is just another asset, head office building or research center. Now come back to this flow chart. Can corporate asset be reasonably and consistently allocated to CGU? The answer is no. Then what you will do? First perform bottom up test. First perform bottom up test. First perform bottom up test without allocating corporate asset, and then write down, then perform top down test, then perform top down test, then perform top down test. First perform bottom up test like we did in goodwill. Whatever you can check under bottom up test, you should do it, and then apply top down test where the larger CGU, maybe the whole enterprise, will be tested for impairment. So we'll take one example, we'll take few example. As to cash generating unit X and Y, there is no goodwill within the carrying values. The carrying values are unit X is 10 million, unit Y is 15 million, so total is 25. The entity has an office building. The entity has an office building. Office building is called corporate asset because it does not generate independent cash flow, but it helps other CGUs in generation of cash flows. That has not been included in the above values and can be allocated. Can be allocated means we are going to perform bottom up test. Can be allocated means bottom up test. You can mention in your book somewhere, to the units on the basis of their respective carrying values. The office building has a carrying value of 5 million. So we are going to allocate allocation of office building 5 million. So what is the ratio I will use? There is no other information except the carrying amount. So I can use the ratio of the carrying amount 10:15. In the ratio 10:15, so the student will reply, what will be the allocation? Please allocate 5 in the ratio of 10:15, 2:3. So 2 and 3, 5. Now my total is 12, 18, 30. The recoverable amount is based on value in use is 9 million for X and 19 million for Y. So you will write recoverable amount 9, 19, total 28, impairment loss, this is 3, this is not applicable because recoverable amount is more, understood? So first you apply the bottom up test. If the recoverable amount is less, then the total of the carrying amount and allocated value of HO building, it is impaired. Unit wise not impaired. Now the next question is, I will write on the left side, allocation of impairment loss. First towards unit X. Unit X carrying amount is 10, HO carrying amount allocated is 2, total is 12. So unit X 10 divided by 12 into 3. 10 divided by 12 into 3. Can you please reply? 10 divided by 12 into 3 is how much? 10 divided by 12 into 3 is 2.5. So unit X will take a impairment hit of 2.5 and the office building will be 0.50 balance, that is 3 minus 2.50. This is probably not printed in your book. If they ask in the exam how the impairment loss will be allocated, then this is your answer. So I would request you to note down allocation of impairment loss. Allocation of impairment loss. Have you noted allocation of impairment loss? Unit X 10 by 12 into 3, 2.50. Unit X 2.50 balance office building. Office building will be 3 minus 2.50, that is 0.50. So that was the answer. The answer is printed in the book. The answer is printed. Up to this it is printed. Remaining you have to write below allocation. Next point. There is a big paragraph. First I will explain that. Keep the notes in front of you. These notes have been prepared after a lot of research and it is very, very useful for you. Notes must be in front of you. Impairment loss, that is excess of carrying amount over recoverable amount, will be first recognized towards goodwill if any, and then to the other assets of the unit in proportion to their carrying amount. Already explained. Second point, impairment loss will be debited to P&L account if it is a non-revalued asset, or revaluation reserve if it is a revalued asset in case of individual asset. Now important point which I am going to highlight using a different highlighter. The impairment loss, you should also highlight, the impairment loss allocated to individual asset should not reduce, the impairment loss allocated to individual asset should not reduce its carrying amount below the highest of the following three after providing impairment loss. Once you have deducted the impairment loss, its carrying amount should not go down below the higher of the following three. Which following three? One is net selling price. If individual assets net selling price can be determined, the carrying amount after providing impairment loss should not be lower than the net selling price, or its value in use if determinable, or its value in use if determinable. And next is 0 to ensure the carrying amount of asset does not become negative. That 0 is to ensure that carrying amount does not become negative. Okay. Suppose there is a CGU and it has got 3 machines. Only understand, there is no question on this asked in the exam, only for theory. Their carrying amount before impairment was, let us say 100, 200, 300. The CGU was tested for impairment. The CGU was tested for impairment, and the impairment loss of the CGU, was suppose 60. Impairment loss of the CGU was 60. So if a CGU has many assets, we will allocate impairment loss 60 in the ratio of 1:2:3. So that should come to 10, 20 and 30. After impairment loss, the carrying amount will become 90, 180, 270, correct? But there is a problem. Suppose, for example sake, machine M net selling price, suppose net selling price of machine 1 is, let's say, 95. If I sell the machine 1, I'll get 95, and it is determinable. Net selling price of machine 1 is determinable. So what this standard is trying to say, after providing impairment loss, it cannot be reduced below the higher of the three. Suppose net selling price is 95. Suppose its value in use can be determined, it is 93 and 0. So it can't go below 95. Machine A carrying amount after impairment loss cannot go below 95. But after you have allocated 10, it has become 90. So what I have to do? I have to add back 5, because I want it to be 95. And this 5 can be allocated to machine 2 and machine 3. So what is the ratio here? 2:3. So maybe I can allocate 2 and I can allocate 3. What cannot be allocated to machine 1 will be transferred to machine 2 and machine 3. So the carrying amount will become now 178 and 267. But there is one more problem. Machine 2, net selling price of machine 2 is suppose 179. Example, net selling price of machine 2 is 179. Machine 2 can be sold for 179, but after providing impairment loss, you have reduced it to 178. What will you do? Again, adjustment. adjustment, you are going to add 1 here and deduct 1 from machine 3. So after that this will become 179, this will become 179, so that it doesn't fall below its net selling price or value in use or 0, whichever is high. 179, and machine 3 will become 266. Again you have to also check the net selling price, value in use of machine 3. Okay, now the student can have a query, what if the net selling price of machine 3 is let us say 268 only, 268. Oh my god, but I can't reduce it to 266, so I will add back 2. So instead of 268 I will take 266, it will become 268. It cannot fall below its net selling price or value in use or 0. So remaining 2, now your question is, what about that remaining 2? To whom we will allocate? We don't have to allocate. It will lapse. So the total impairment loss that will be provided will be, for machine 1, 10 minus 10 plus 5. Machine 1 will get only 5 impairment loss. Machine 2 will get this 20, this 2, 22, but we have added back 1. So machine 2 will take a hit of 21 only. And machine 3, 30, and this 3, 33, and 1, 34, but we have added back 2. 34, add back 2, so 32. Machine 3 will take a hit of only 32. That was a little messy affair, I can understand, but there is no printed question on that. But for understanding purpose, I had to explain. After providing impairment loss, the carrying amount should not be lower than net selling price or value in use or 0, whichever is higher. And if a particular asset cannot absorb that impairment loss, it can be allocated to other asset of that CGU. Okay, but after allocating to other asset of the CGU, you have to also apply the same test for the other assets of the CGU. Whatever cannot be allocated to CGU1 cannot be allocated to CGU2. You can't shift the impairment loss from CGU1 to CGU2. You can only do the allocation of impairment loss within the assets of a CGU. So that was the concept. Okay. Now we'll take one question number 24. Just before that, one more line you have to underline, which actually we have taken one problem in the previous lecture. No impairment loss is recognized if the CGU to which the asset belongs is not impaired, even if net selling price is lower than the carrying amount. This is individual asset, this is CGU. Carrying amount of the asset is 100. Net selling price is 95. There is an indication of impairment. If net selling price is below the carrying amount, there is an indication of impairment, but I can't calculate the value in use because it does not generate independent cash flow, and I cannot say that value in use is close to net selling price. Therefore, I will test CGU for impairment. CGU's carrying amount is 1500 and recoverable amount is 1600. Impairment loss not applicable. So what the standard is saying, if the CGU is not impaired, the asset is also not impaired, even though there is a possibility that its net selling price may have gone down below the carrying amount, but net selling price is not recoverable amount. We have to take value in use, and value in use is not calculable here because it does not generate independent cash flow. So asset is not impaired, but then you may have to revise its useful life if there was an indication of impairment, or you may have to revise the salvage value. Okay. Next line, but in case asset is decided to be replaced and it is held for disposal, if the asset is held for disposal, then it does not generate value in use, then its value in use is close to net selling price. Of course, if the asset is not going to be used, its value in use means only salvage value, and that will be closer to the net selling price, and the impairment loss, if any, will be recognized even if CGU to which it belongs does not get impaired. Now suppose this is the CGU, this is the asset. This asset net selling price is 95, carrying amount is 100, but value in use is also close to 95 because the asset is not going to be used, it is held for disposal. Then in that case, whether CGU is impaired or not, the asset will be impaired because now the value in use is close to the net selling price. Let us solve few questions now on CGU and corporate assets. Are you ready? Question number 24. Question number 24. My rank in CA Foundation 2, CA Intermediate 4 and CA Final 24. What a coincidence. Okay, very few students will have this coincidence. 2, 4, 24. Question number 24. A cash generating unit has this net asset. This is the CGU. It has got goodwill, property, plant and equipment, total 60. Recoverable amount is 45. Allocate the impairment loss. So what I'll do, 60 is compared with 45. Impairment loss 15. Allocation, first goodwill 10, then property in the ratio of 2:3, 2/5 into remaining. Out of 15, 10 has been allocated to goodwill, so this property will be impaired by 2, and plant and equipment 3/5 into 5, 3. So the allocation will be 10 towards goodwill, 2 towards property and 3 towards plant. Revised carrying amount after providing impairment loss: goodwill 0, property 18, plant 27 and total 45. Check the answer if it is right. First allocate to goodwill and then to property and plant in the ratio of 20:30, that is 2:3. One more question will practice. 25. There are 3 assets in CGU with a carrying amount of 6 lakh. So asset 1, asset 2, asset 3, under one CGU you have 3 assets and the carrying amount is 6 lakh, 12 lakh, 9 lakh and total. So total will be 27. Total will be 27. Recoverable amount recoverable amount is 18. Recoverable amount is 18. So what is the impairment loss? 9. Impairment loss is 9. Okay. Allocation of impairment loss. So you will allocate in the ratio of 6:12:9. So please tell me, if I have to allocate this 9 in the ratio of 6:12:9, what will be the answer? Let me try. 6 divided by 27 into 9. So the answer is 2 here, 4 here and 3 here. This way the impairment loss will be allocated. And how the impairment loss will be treated? So you will have to write a note. If these are non-revalued asset, impairment loss will be transferred to P&L account. If these are revalued asset, then first allocate impairment loss towards revaluation reserve, and balance, if any, will be transferred to P&L account. Impairment loss in case of revalued asset will be first adjusted against revaluation reserve, and balance, if any, will be transferred to profit and loss account. So I have written the answer in your book. You have to only concentrate on understanding. Read the answer yourself. I have written the answer in the notes. This question is taken from a reference book. All questions are not from study material. There are additional questions from other reference book and past exams. Is it right? Have you read the note printed below? This is how the student should write the answer. Okay. Now come to one big question. Question number 26. Question number 26. An enterprise has 3 cash generating units. Very, very important. Source reference book, beyond study material. If you want to score very good marks, then don't just rely on the study material. Study material only gives you guidance, but for tackling such difficult exams, you need to practice additional question, different varieties of question which will have different complexities, so that you will also get a rank in the exam. Understood? Getting rank is not very difficult, but then you need to put so much of effort also. Question number 26. An enterprise has 3 CGU, 1, 2, 3, which have a carrying amount of 20 lakh, 30 lakh and 40 lakh. There are some indication for the impairment of the assets of the enterprise. Beside the cash generating unit, there is an HO building. HO building is a corporate asset, and research center, this is also corporate asset. There are 2 corporate assets whose carrying amount is 40 lakh and 15 lakh respectively. The life of unit 1 is 8 years, while unit इंटरनेट में रुको, यहाँ पे इसका ये वाला क्वेश्चन रिकॉर्ड करके बंद करते हैं आज के लिए. Okay. Number of years, write down 8, 10, 10. Number of years 8, 10, 10. Now write down present value annuity factor. 12% is the discount rate, comma n is in first column 8 years. 1 divided by 1.12 equal to memory plus 8 times memory recall, you will get 4.9676. Next column 1 divided by 1.12 equal to memory plus 10 times memory recall function, MRC function, you will get 5.6502, and the same answer unit 3 5.6502. Then you write value in use, multiply point number A into C, 3,20,000 into factor, you will get 15,89,632. 3,10,000 into this number, 17,51,562. 5,70,000 into this number, 32,20,614. Then net selling price, which is given in the problem, please write down where it is given in the last paragraph. 20 lakh, 28 lakh and 50 lakh. Recoverable amount will be higher of the two. Value in use, net selling price, which is higher? First column 20 lakh is higher. Unit 2, which is higher? 28 lakh is higher. Next column unit 3, which is higher? 50 lakh is higher. Okay, 50 lakh is higher. Okay, check karo. 50 lakh is higher. Understood? Now next very important step is how to provide impairment loss for corporate building which can be allocated on a reasonable basis. So next step number 2, total carrying amount and impairment loss. The question is how to allocate carrying amount. How to allocate carrying amount of HO building. How to allocate carrying amount of HO building? Can you answer? So some student can say that we can allocate the carrying amount of HO building in the ratio of the carrying amount of unit 1, 2, 3. Some student can say we can allocate the carrying amount in the ratio of their remaining life. Which one is right? Which one is right? 20, 30, 40 is right, or 8, 10 and 10 are right? So what the institute had done in the current example we are solving, they have given weightage to both the factors. They have given weightage to carrying amount also, and they have given weightage to life also. So I am going to allocate the carrying amount of HO building in the ratio of the product of carrying amount and remaining life. So I am giving weightage to both the factors. So I will take 20 into 8, that is weight 160, 30 into 10 300 and 40 into 10 400. This is the ratio for allocation of carrying amount. This is the ratio for allocation of carrying amount. Okay, so what is the carrying amount of the head office building? The head office building carrying amount is 40 lakh. The head office building carrying amount is 40 lakh, and the ratio is 16:30:40. So please apply ratio 40 lakh in the ratio 16:30:40 and you will get 7,44,186. Then you will get 1,395,349. You will get 1,860,465. Total is 40 lakh. So 40 lakh allocated in the ratio of 16:30:40. We are giving weightage to both the factors for the purpose of allocation. Now next point is total carrying amount. Please take your calculator, add the carrying amount of the CGU, also add the HO cost allocated. You can do without calculator also. 27,44,186, 43,95,349, 58,60,465, 1 crore 30 lakh. 1 crore 30 lakh. Recoverable amount we have already computed. Recoverable amount we have already computed in the working note 1. Just refer the previous table. Last line, working note point F. Can you see last line point F? 20 lakh, 28 lakh, 50 lakh. Now let us check whether there is impairment or not. For unit 1, total is 98 lakh. Unit 1 carrying amount is more, so there is impairment loss, 744,186. Unit 2 carrying amount is more, so there is an impairment loss. Take the difference, 15,95,349. Unit 3 there is impairment because carrying amount is more, 8,60,465. These are the total impairment loss. These are the total impairment loss, and I am going to allocate in the ratio of their carrying amount. So highlight these numbers because the answer is not over. The bottom up test is still under progress. I am going to explain, then I am going to go to the next table. This loss 744,186 will be allocated to the unit and the HO building in the ratio of 20 lakh is to 744,186. Ratio for allocation. This 15,95,349 will be allocated in the ratio of 30 lakh is to 13,95,349, and this will be allocated over CGU and HO building in the ratio of 40 lakh is to 1,860,465. So I have to allocate this impairment loss in these ratios. So we'll go to the next table where we are going to allocate the impairment loss. Come to the next table. Allocation of impairment loss between HO and CGU. Allocation of impairment loss between HO and CGU. Understand the table. Unit 1, Unit 2, Unit 3 total. First we will allocate to HO building. I have prepared a working note below for Unit 1. See the calculation. Your impairment loss is 744,186. Divide by total multiplied by HO building carrying amount. So the amount allocated to HO building will be 201,813. Total impairment loss minus allocated to HO will be the impairment loss to be allocated to CGU. 744,186 minus 744,186 is impairment loss, minus 201,813 will be allocated to assets of the CGU. Now right below, this is the unit 2 calculation for HO building. Impairment loss divided by total carrying amount into allocated HO cost. Please solve this part. You will get 506,460. Total impairment loss is 1595349 minus 506,460. 1595349 minus 506,460, 1088889 will be allocated to assets of the CGU. Okay, now write unit 3 here. Calculate impairment loss 860,465 divided by total 5860465 multiplied by 1860465. So this comes to 273,163. 273,163. Now take 860,465 minus 273,163, and that is 587,302. Take the total allocated to HO building. Take the total of these three numbers. Take the total and it comes to 981,436. 981,436. Take the total of assets 22,18,564. 22,18,564. So I'll just summarize. You're going to allocate 542,373 to unit 1, 1088,889 to unit 2, 587,302 to unit 3, 981,436 to HO building. So this is called bottom up approach. This is called bottom up approach. If there was no research center in this problem, then my answer will end here. But because there is a research center also, and the carrying amount of research center cannot be allocated, now we are going to apply what is called top down approach. Top down test. It's written in the book. Top down test. First we'll perform bottom up test, then we'll perform top down test. Okay. So please write unit 1, 2, 3 HO research total printed in the book. Start. Carrying amount, original carrying amount given in the problem, 20 lakh, 30 lakh, 40 lakh, 40 lakh, 15 lakh. Take the total 1,45 lakh. Now what should I do? First I should deduct impairment loss under bottom up test. First I should deduct impairment loss under bottom up test. Go to the previous table and you will get the answer. Unit 1 542,373. You will find in unit 1 the second line of the previous table, unit 1. Unit 2, you can see previous table. Unit 3, second line, third column, and head office building, first line, total column. First line, previous working note, total column. 981,436. Research we have not yet provided. Total 32 lakh. This you can check there also. After you have performed bottom-up test, after you have performed bottom-up test, now you perform top-down test. But first find out revised carrying amount, A minus B. A minus B. Take on your calculator, solve. Take on your calculator and solve on your own. So that comes to 1 crore 13 lakh. That comes to 1 crore 13 lakh. Now write down recoverable amount of the larger CGU. Recoverable amount of enterprise as a whole, and that is 1 crore 15 lakh. Carrying amount 1 crore 13 lakh. Recoverable amount is more. Impairment loss is not there. So you will write a note. In the book I have written there is no impairment loss for research center. Written in the book. There is no impairment loss for research center, because the entire enterprise, if I consider, the recoverable amount is more than the carrying amount. So this is my answer for this question. Any query? Any query? If you have any query, you will email me vinod_ca@yahoo.com, WhatsApp on 97669 21860 94223 65495. You can store these numbers on your mobile and you can message, call on these numbers for doubt solving. Okay. Come to paragraph number 22. Liability for impairment loss. Liability for impairment loss will arise only if the loss exceeds the carrying amount. It shall be recognized for a cash generating unit if that is required by any other accounting standard. Oh my God, what is that? Suppose I have a machine. Carrying amount is 10,000. But if I have to discard it, selling price is 0, but cost of removal is 15,000. Cost of removal is 15,000. So the net selling price is minus 15,000. Net selling price is minus 15,000. So sometime we might have to incur some liability for removal. We might have commitment that we will remove it, and that might cost you 15,000 even though net selling price is 0. So the loss exceeds the carrying amount. The loss is exceeding the carrying amount. If there is a present obligation to provide for this liability, then I will provide for that liability if required by any other accounting standard. For example, which standard? AS 29, provisions, contingent liability and contingent asset. So if this is a present obligation to remove that asset, dismantle that asset, then the entity might have to make a provision for dismantling cost or provision for removal cost. Next question number 27. November 10 exam. An asset does not meet the requirement of environment laws which have been recently enacted. The asset has to be destroyed as per the law. Oh, the carrying amount of the asset is 6 lakh and you will have to destroy the asset. So net selling price is how much? net selling price, value in use. Value in use will be 0, you are not going to use it, but the estimated cost of destroying the asset is 60,000. So net selling price will be 0 minus 70,000. You will not be able to sell it, but you have to incur a destroying cost, disposal cost. So that is minus 70,000 is net selling price. Carrying amount 6 lakh, net selling price minus 70,000, value in use 0, recoverable amount higher of these two 0, impairment loss is equal to 6 lakh. Impairment loss will be equal to 6 lakh. Carrying amount is 6 lakh, recoverable amount is 0, impairment loss is 6 lakh. Company might have to provide for destruction cost. Company might have to provide for, please note down in the answer, company might have to provide for cost of destruction if it is a present obligation, if it is a present obligation. I will ask you to write one more line. The company might have to provide for the cost of destruction if it is a present obligation. Question has been asked in the exam for how many marks? Not mentioned, but around 4 to 5 marks. Around 4 to 5 marks. So today in the homework, read the answer. The same thing which is printed here, I have explained to you. Now the next part of this chapter is about reversal of impairment loss. What do you mean by reversal? Carrying amount 100, recoverable amount has increased, because sometime it is possible that the recoverable amount has gone up for such asset which were earlier impaired. Possible. Let's say before the lockdown the value of a building was 10 lakh, before the lockdown, corona, all this problem. But when the lockdown was announced, businesses were closed, the recoverable amount has gone down to 8 lakh. After 1 or 2 years, again the businesses have started flourishing and the recoverable amount has gone to 11 lakh. So earlier you might have provided for impairment loss. Now the indications are that its recoverable amount has gone up. Does this standard allow you to reverse the impairment loss? The answer is yes, subject to certain condition. Subject to certain condition, impairment loss can be reversed. But first you have to search for indication of impairment. First you have to search for indication of impairment. Just like when you search for indication of impairment and provided for impairment loss if any, similarly you have to search for reversal of impairment loss. The reversal of impairment loss indication can come from either external source outside the organization or internal source, that is within the organization. Example of external indicator. These are examples. This list is not exhaustive. You can have any other indication also. One is the market value has increased. Example, I gave you building. Many building have found that their values have increased. Secondly, positive changes in technology. You have upgraded the technology so that it is now matching with the current market requirement. The market demand has again changed in the favor of your product. economy has boomed, there is growth, there is demand. Government law has also changed in your favor. Earlier the government had banned the product, now the government has removed the ban and you can now manufacture that product, your value in use will increase. So these are external indication. Second, interest rates have decreased. Lower the interest rate, higher the present value, that is mathematics. Lower the interest rate, higher the present value. So if the interest rates are reduced, the value in use will increase. If the value in use will increase, there is a possibility that recoverable amount has increased. And if there is a possibility that recoverable amount has increased, you will sit down, compute the recoverable amount. If it is more than carrying amount, you will think about reversal. And next is market capitalization is more than book value or carrying amount of net asset. For example, market capitalization is 120 crore and carrying amount of the net asset is 100 crore. So the ratio between market capitalization to net asset is more than 1. So if this ratio of market capitalization to net asset is greater than 1, it is an indication of reversal of impairment loss. It's an indication of reversal. Next point, you can get indication from internal sources also, from within the organization. You have undergone capital restructuring or capital expenditure, modification. So you have modified your asset, restructured your asset, put more money on that asset and you have enhanced the capacity of that asset. You have improved the condition of that asset by incurring capital expenditure on that asset, which means now the asset can generate more output. Indication of increase in recoverable amount or significant internal changes favorably affecting the operation of an asset. So positive changes within the organization, restructuring, incurring capital expenditure, reorganizing the business, and those restructuring, reorganization is now over and you believe that the asset will generate more output. And the third is actual performance is more than budgeted performance. Company made budget for its output, production, and they found that the actual output is much more than what we had budgeted, what we had planned to produce. So if your variances, in standard costing they call variances, if you find that most of your variances are getting positive, it is an indication of reversal of impairment. Okay. So once we get the reversal of impairment loss indication, I need to compute recoverable amount. Okay. Reversal of impairment loss basically represents the increase in the service potential of the asset. Now there are two things. One is recoverable amount can increase due to increase in improvement in the asset. Service potential has improved, capacity has improved, efficiency has improved. And second reason, the recoverable amount can increase due to passage of time. Due to passage of time. Recoverable amount can improve due to only passage of time. How is that possible? So the standard says, now pay attention, many teacher will not explain this, many books will not explain this. If increase in recoverable amount is due to increase in service potential, then we'll reverse the impairment loss. Then we are going to reverse the impairment loss subject to condition. But if the recoverable amount is increasing due to just the passage of time, then impairment loss, underline here in your book, shall not be reversed. Reversal of impairment loss shall not be recognized. Underline. Now your question would be, how recoverable amount increases due to passage of time? Very good question. So I am going to explain and all of you will pay attention. We are in year 0, suppose. An asset will generate, suppose 1 lakh after 5 years. If I have to compute the present value, that is value in use, I will take 1 lakh and suppose the discount rate is 10%, divide by 1.10 to the power 5. So what you do, take a calculator, type 1 lakh, divide by 1.10, press equal to 5 times. So that is 62092. If I go to year 1, 1 year is over. That is 1 year has passed. 1 year has passed and now I am standing here at the end of year 1. Now the gap is only 4 years. Gap between end of year 1 and end of year 5 is 4 years. Again, if I compute the present value, now the present value will be 1 lakh divided by 1.10 to the power 4, because the gap is only 1, 2, 3, 4. The value of the asset is still 1 lakh, but we are 1 year closer to 5th year, so 1 lakh divided by 1.10, 4 times equal to, that is now 68301. Similarly, if I compute the present value at the end of year 2, it will be 1 lakh divided by, now the gap is only 3 years now, 2 years have passed, 3 years are remaining. So 1 lakh divided by 1.10, 3 times equal to, so that is 75131. This increase in the value in use, can you see the value in use will increase? If you compute here today 62092, if you compute after 1 year it is 68301, if you compute after year 2 it is 75131. This increase in value in use is due to just the passage of time, hence ignored in reversal of impairment loss, because there is no increase in service potential. It is only due to the impact of discounting, because you are discounting by 4 year, 3 year, 2 year, the value in use will increase. So the standard says don't reverse impairment loss if it is due to passage of time. Is it right? So today we'll stop here, we'll continue tomorrow. Dear student, thank you very much for watching the lecture on the YouTube channel AS Foundation. I hope you enjoyed the lecture. Please like, share and most importantly subscribe, because more lectures will appear on our YouTube channel for intermediate and final student. You can purchase the whole lecture on our website vinod.in and they are covered in detail. Trust me, No other lecture would be as detailed as we have covered in our batch. Website is vino.in. We are offering advanced accounting and financial management right now for few more days at a very reasonable and affordable price. So please also share these videos and this news with all your intermediate friends. Are you genuinely interested in passing in first attempt? If yes, these are the video lectures for you. Are you genuinely interested in coming into rank like I did it? So I am sharing whatever I did in my class. So you can also get the rank, but you need the right guidance. Okay. Thank you very much. See you. Bye bye. बंद कर दो.